Hi everyone, hope you guys are all having a great day today. In today's video, I'm going to cover the whole entire market in terms of Dow Jones, NASDAQ, and S&P 500, including the economic calendar, plus investor sentiment, and a little bit of NVIDIA, because obviously the market got pulled down today because not a competitor to NVIDIA, but a competitor to, like, for example, ChatGPT. There are a startup company that states that, if true fully, and from what they're showing, it seems like it could potentially be true, that they surpassed ChatGPT performance with little investment and using less powerful chips that NVIDIA provided before versus the AI chips, full blown out AI chips that NVIDIA is providing, for example, to ChatGPT, OpenAI, and Meta and all that stuff. So that's going to affect potentially the future sales of NVIDIA. And we saw NVIDIA drop down relatively 17%, give or take. And then we saw the S&P drop down 1.4 or 1.5%, NASDAQ dropping down almost 3%, but the Dow Jones was not affected and went up 0.65%. So I'm going to go over that. I'm going to go over the NVIDIA stock as well. But first, I'm going to go over investor sentiment. And before this whole entire thing for January 2022, it was going up in terms of bullish sentiment at 43.4%, past historical average at 37.5. We've seen it consistently decrease, but then it spiked up, which was awesome. But I'm curious how it's going to look like after this data point in terms of the chip effect. But then the bullish or bear sentiment was increasing, but it substantially decreased to 29.4, lower than historical average. So the market was pretty much starting to be optimistic, and indications was showing to the upside prior to this whole entire fiasco of AI and chip stuff, right? Now, in terms of economic calendar, I'm just going to go over the most important stuff quickly. So basically, we have for Tuesday, January 28th, 8:30 a.m., we have durable goods orders, durable goods minus transportation, S&P Case-Shiller home price index, 20 cities, consumer confidence at 10 a.m. And then the big heavy hitter stuff is FOMC interest rate decision at 2 p.m. for the Wednesday, January 29th. And then Fed Chair Powell will have a press conference at 2:30 p.m. Eastern time, which I will go over that, or not go over that. I will live stream that on my channel on Twitter and or X and YouTube at the same time. So if you want to be notified when I do, consider following, subscribing. But we have 8:30 a.m. We have Advanced U.S. trade balance in goods, advanced retail inventories, advanced wholesale inventories, and like I stated, the FOMC decision, so interest rates and Fed Chair Powell. Then on Thursday, January 30th, we have GDP, 8:30 a.m., initial jobless claims, and at 10 a.m. we have pending home sales, and then also pretty much heavy hitters for this week. Sorry about that. Friday, January 31st, at 8:30 a.m. we have the following: Fed Gov Michelle Bowman speaks, employment costs index, personal income nominal, personal spending nominal, and then PCE inflation numbers, which the Fed regards these as highly more accurate versus CPI and PPI inflation numbers. But I think it was like not the last talk, but the talk prior, they kind of looked at CPI and PPI inflation numbers more, which is kind of interesting. But as well as 8:30 a.m. we have PCE index, PCE year over year, core PCE index, core PCE year over year. Essentially, they're expecting a slight increase and flatline. What I mean by that is, for example, core PCE, which has energy removed, which is quite volatile. Previously, it was 0.1. This time around, they're expecting 0.2. And then, so slight increase. And then core PCE year over year. That was for the month of December, by the way. So for year over year, core PCE is 2.8. This time around, they're expecting 2.8, so flatline. So not much changes. And if you're looking at the non-core, 0.1 versus 0.3, slight increase, and then 2.4 versus 2.6 for the PCE year over year, slight increase. The only one core is flatlined in terms of PCE year over year. And then at 9:45 a.m., we have Chicago Business Barometer, PMI, for the month of January. And then now in terms of the analysis portion, and then NVIDIA. And then NVIDIA, by the way, has an upward trend resistance line dating back since 2017, and it's pretty much hovering around these points. So quite interesting for sure. But for the S&P, prior to this whole entire fiasco, S&P, NASDAQ, and Dow Jones were all pointing to initially upside. Plus the investor sentiment coming in bullish strong, it kind of really solidified that the past data points showing upside coming up was actually coming to fruition potentially. But again, we had this whole entire situation. So in case you're new to the channel, we have an upward trend resistance line dating back since 2010, upward trend support level dating back since 2010, a major 2 crashes, so only 2 touch points, not 3 touch points yet, dating back since 2010 as well. but we are in the mid zone. We've been pulled down before in the mid zone. We're actually a little bit higher than the mid zone, and then we have room to go to the upside. And even if we go to the upside, doesn't mean that the market will go down. It still goes up, but it's just or it could still go up, but it's only it's been captured underneath the upward trend resistance line, right? This is for the S&P, specifically looking at ETF SPY ETF for the S&P 500, closed at $599.37. And in my opinion, I think the market is overreacting for the NVIDIA, even though the sales, essentially, like I stated, competitor for example, ChatGPT and all that stuff in terms of AI, they, with less investments and using less powerful NVIDIA chips that NVIDIA is providing. They're still NVIDIA chips, but that NVIDIA is providing for example, Meta or ChatGPT, OpenAI, which are the more expensive chips. They're able to outperform ChatGPT with less performing chips from NVIDIA and with less investments. So if that is the case, that could affect future sales for NVIDIA. But mind you, NVIDIA has earnings coming up on February 26th, so I'm sure they're going to address something or going to be questioned about it on February 26th when their earnings comes out. Now, the thing is too, NVIDIA, again, by the way, I'm not a professional, so please do your own due diligence and research before buying and selling, but NVIDIA tends to kind of like go up before earnings comes out. So it's not a guarantee, but I think that could be the case again this time around because it got hit. I think the market overreacted personally. Will it go up tomorrow? Not necessarily. I'm sure we have probably another day maybe to go down, maybe 2 days to go down potentially, but it could still bounce up tomorrow. There are a couple levels I'm going to go through soon. But for the S&P, again, SPY ETF for the S&P 500 closed at $599.37. 1 year chart, MAC line is in the bullish movement, so technically it could still go up, but if we see a slowdown plus a lighter shade of green, pull down, could come down. We are in the 50-day moving average of the 1 year chart, so potential bounce up to the upside potentially. But the problem is if you look at the 5-year chart, bearish movement indicating a stronger pull down to the downside with a more solid red, and technically we could get pulled down more. But if you look at this first wave right about here, give or take, we could be in a zone to bounce up potentially. Plus, if I remember, like I stated, 50-day moving average on the 1 year chart, so it could be a good time to bounce up to the upside potentially. Otherwise, we would be heading down to this zone, which only has like 2 data points, right, within give or take, just drawing a quick line. But I don't think that will be the case, but it could be the third touch point. And if you're thinking that's going to be the case, you're looking at $582 give or take for the SPY ETF for the S&P 500, but we'll see. And then if you look at the alt chart, the reason why I think the market's overreacting to is indications before where the S&P and NASDAQ and Dow Jones were showing upside, plus the alt chart is still showing a pretty strong bullish movement. It's not really arching down that much for the S&P and for the Dow Jones, but the NASDAQ is showing a little bit different. I'm going to go over that. But again, we have more room to go to the upside. Not necessarily the case. We could get pulled down like we did before back in 2020, but that was during, it wasn't the really, actually, yeah, it was 2020. So yeah, I don't know. Maybe we do have more room to go upside and won't get pulled down. But we've seen mid zones get pulled down previously, so there's that. Now for the NASDAQ, almost paints the same picture. Almost upward trend resistance line dating back to 2010, upward trend support level dating back to 2010, breakout 2020 to 2022, got pulled back down, had issues passing, false breakout, and then issues passing again, false breakouts. If I zoom in right about here, 1 year chart, bearish bullish movement, but it is coming down just like the S&P and more sharper to the downside, so it could be coming down quite dramatically. This is the upward trend resistance line dating back to 2010. You can see it bounced off as support as well. Downward trend resistance line recently, we were breaking up to the upside, which was awesome. The only problem is with the chip stuff got obviously pulled down, and we are lower than the 50-day moving average for the 1 year chart, plus lower than the 2010 level, which is unfortunate. And the question is this pull down going to be legitimate? And it could be the case. Sometimes it looks like for the NASDAQ, but the problem is the Dow Jones and the S&P are showing up the upside. Plus, I think the market's overreacting. Again, I'm not a professional, so please do own due diligence and research before buying and selling. But I think this could be overreaction and then it get pulled back up. But 5-year chart showing otherwise. MAC line is showing bearish movement and potentially more further downside. But again, in my opinion, I think we could, for example, we could be bouncing off this downward trend resistance line as support potentially and go to upside, retest the 50-day moving average, which is roughly about, in case you're wondering, QQQ, ETF for NASDAQ, looking at, closed at $514.21. And the moving average for the 1 year chart is about $517.07. So retest that potentially and then try to break through. The unfortunate part is retesting it will be retesting upward trend resistance line dating back since 2010 as well. That's the unfortunate part. Now the alt chart, almost same thing as S&P, bullish movement, but the thing is a little bit slightly arched down slightly. But the difference though too, it is at the level, underneath the level of the 2010 upward trend resistance line, versus the S&P has room to go to the upside, right? So the NASDAQ might show some challenges, and rightfully so, I guess, right? Because the biggest heavy hitter for NASDAQ, it is a tech ETF basically, right? It's NVIDIA, right? With a market cap of $2.9 trillion. So when it drops 17%, that's a massive, massive hit to the tech sector / NASDAQ, right? Now, if we look at Dow Jones, it paints a completely different picture, unaffected for the most part. 1 year chart, a bullish movement, really strong, going to retest the previous all-time highs, setting at 44,713 points. Previous all-time highs was give or take about 45,100 points, give or take somewhere around there. And 5 year chart, bullish movement almost. It's a bearish movement, but it's about to cross over. The only headwind I would say is retesting the all-time highs, so probably have some issues passing all-time highs and then ultimately passing it with the upward trend that it's showing. And then the alt chart, strong upside showing for overall. Again, all-time highs, retest all-time highs, and break through completely. So we'll see. We'll see how it goes. Now, in terms of NASDAQ, or NVIDIA, which is the interesting part, is if you look at NVIDIA, dating back since 2017, upward trend resistance line, obviously a couple of false breakouts here and there. You could see tested again in 2021, clean touch points right about here in 2024, March of 2024. Yes, a couple of false breakouts, but clearly having issues sticking with passing this whole entire zone, right? Upward trend resistance line, that is, right? So we'll see what happens. But if you look at the 1 year chart, you could see also when we were trying to pass it, yes, again, false breakouts, and bounced off as support too, by the way, mind you. So this line is legitimate, even though it might not look the cleanest though, but it is a legitimate upward trend resistance / support as a recent line. But coincidentally, when we were trying to pass it again, even though we had a false breakout prior, the chip information came out, and or the AI stuff, chat GPT and all that stuff, competitor with China and all that stuff came out, got pulled down. The problem is though, we could technically have more downside, but again, earnings is coming up too, and then I'm sure they'll address it sooner or later, maybe saying they're not worried or anything, because the only concern is if the applications end up using the full force power of the higher end of the chips of NVIDIA, then NVIDIA is still fine. But the problem is if the competitor with like, for example, the startup in China, they're able to use it for a fraction of the power, then the applications are not quite there to use the full force yet. So then NVIDIA sales could slow down, where they would need less chips to power the current applications that we're looking at right now until the applications catch up and use the full force power. And then they'll need the better performance and buy those chips at the multitudes they were buying them at, right? But we'll see. We'll see how it goes, right? But either way, right now it is at 200-day moving average of the 1 year chart, but will it bounce? And technically already broke through, so that is unfortunate too at the same time. So technically more downside is to come with the MAC line in the bearish movement and showing strong downside, right? We saw massive volume uptick in terms of sales, something we haven't seen since, give or take, about the volume probably back in 2024 of April. Saw a drop. We did still go up though, mind you, but different situations all the time, right? So we'll see what happens for now. But 5 year chart, MAC line is strong, bearish movement to the downside. Right now could bounce off the 50-day moving average of the 5 year chart. So we are at levels to potentially bounce off of, because technically the market could have overreacted, but 200-day moving average for 1 year chart, 50-day moving average for the 5 year chart, potential bounce offs. And then the alt chart is showing a bullish movement still, but it is arching quite significantly to the bearish movement, so potentially downside. And again, we're at levels that potentially could come down. And then if you're wondering, are we going to come down to, like, for example, like we've seen in the past, 50-day moving average of the alt chart? Well, if that's the case, then you're looking at, give or take, mind you, close at $118.42 for NVIDIA stock. You're looking at pretty much 40, which is, I don't think that's going to happen, but I'm not a professional, so there's just the data points, $47.22. I don't think that's going to happen personally, but anything is possible, right? We've come from before $32 all the way down to, but remember there were splits and all that stuff, $12.40. So this is a different realm, but still nonetheless, I guess always possible. I just don't think that's going to happen personally, just because I know the orders were massive coming in for NVIDIA. But we'll see when earnings comes out February 2026, or not February 2026, but February 26th of 2025, and see what they'll say in terms of future outlooks, right? But if this comes down substantially again, expect more downside of the overall market, right? So there's that. But thanks again for watching. That's basically it for today's video. Appreciate it, the awesome support. If you guys want to be notified when I do upload my next video in terms of the overall market, which I do weekly, except today was unfortunately, or this week was one day delayed. Sorry about that. Consider following and subscribing so you'll be notified when I do. We'll be live streaming the conference that Jerome Powell will be speaking after the FOMC decision making on Wednesday. So consider following and subscribing for that if you want to be notified. And thanks again for watching. If you liked it, by the way, consider dropping a like. It does help out the channel. So thank you so much for that. But thanks again for watching. Take care. God bless and peace.